Welcome back, ladies and gentlemen, to NSJ Gold Corp's channel. Joining us, as always, VP of Corporate Development, Rodney Stevens. It's good to see you again, sir.
Good to see you too, Kyle.
So we've gone over a lot. Recently, we touched on your background, management. We kind of broke down the Golden Hills project. But today, I kind of want to step back, focus on these broader retail kind of constructed questions. And the first one, and probably the most entertaining to me specifically, is we're kind of sitting in this interesting phase where gold's holding real highs. We got copper holding real highs. Yet when you're taking a look at the commodities exploration and mining sector, like the likes of Barrick Gold, we're seeing like all of these companies trading down 30, 40+%. And it's just so interesting to see this moment where like it's so insanely profitable to be in this industry, yet these companies are trading down, which almost sets up for what I would consider a value play. But I would love to get your opinions on the broader commodities and just what your thoughts are on this.
Yeah, well, as you know, Kyle, we're drilling a gold deposit, so we're fairly well versed on the gold sector. But when we put together our concept drilling program for the copper porphyry, we'll be drilling a copper and gold porphyry. So we're actually going to be probably primarily a copper play ultimately. And copper is outperforming gold at this state. But in terms of timing of commodities, I mean, I could talk on the gold sector, and other commodities usually follow, but they go in like about 10-year cycles. And we're in about the 5th-year cycle of a new gold bull market. And usually about somewhere midway between the bull market, you get this like interim correction, which we're going through now. Gold usually leads the commodities, and then copper and other base metals and silver sort of follows gold's lead, because gold is more of a financial asset rather than a commodity that's actually used in industry. So the financial background for gold, started with more inflation weighted when inflation started picking up, and gold kind of moves with the real rate of return on money. So when the US dollar is printing and inflation is higher than the interest rate you're getting on the US dollar, that's good for gold. And if that spread widens, that's also good for gold. So one interesting thing about looking at the real rate of return, the chart that I look at is the Treasury Inflation Protected Securities, TIPS. And looking at that chart is actually a reflection of the real rate of return. And if you look at that chart over the last 4 months, it's been going higher because inflation's been actually taking off and interest rates haven't been following. And ultimately, gold is going to follow the real rate of return on the US dollar. So it's only a matter of time before this correction in gold sort of recovers and then starts making an all new time high. And then we'll probably see it rally for at least another 5 years. And then it'll depend on the world's financial scenario, whether or not inflation goes parabolic, or in my view, inflation is going to go parabolic unless a next industrial revolution takes off and the government gets enough taxes to pay down its debt before they get into financial chaos.
That's a great point on the gold side. And I want to touch too, because inflation just hit a 13-year high. They're way above expectations. I think we're well over 5% now. And I think it's good to touch on gold. But like you said, I think where there's a lot of interest is right now too, is in the copper prices, right? Holding over $4 a pound. And considering we're moving into this new cycle of renewables, and people like really lacking the understanding of like the triple use cases for copper in electric vehicles compared to the ICE vehicles that they're currently utilizing the products with. Do you want to touch on copper at all? What's your experience there?
Yeah, well, so with the other commodities, they lag gold because gold as a financial commodity, it goes first. And then actual inflation comes later. And actual inflation comes in other commodities first, such as copper and oil, which are in everything. And then it comes into like the consumer price index inflation, and which is primarily driven by wage inflation. So right now we're seeing the move of inflation into commodities, which showing that inflation is being sticky and persistent, and then if that continues, it will ultimately lead to wage inflation as well, which we're not seeing right now, but that could develop in the future. But so with copper, commodities are getting hit by two forces. One is the supply disruptions. There's the supply chain that's impacted, and it's just being able to supply the demand on time. So there's this shortage in supply due to COVID. But then you have governments stimulating their economies in response to COVID. So you're getting a storm where you're getting government stimulating economy with supply constraints. And so then you have copper and oil, they've all moved higher. But it should continue to move higher as well, because I think this is going to be persistent and last longer as well. But copper's actually recently rallied pretty hard relative to other metals. And I think that the other driving force of that, as you touched on, is the movement to electric vehicles. Copper is, electric vehicles are replacing gas vehicles. And so copper is, other metals as well. There's an electric vehicle revolution in the battery metals, but copper is a battery metal, and copper is also used in these electric vehicles as well. So copper is a prime beneficiary of the trend towards electronic vehicles. And so I think you're seeing switching from oil into copper now.
Yeah, that's a really good kind of parallel. I want to touch, because we're speaking so much of hyperinflation, kind of these logistics supply shortages. And I was just talking with some more of these tech-focused companies dealing with these chip supply shortages. But I'm really curious, because this isn't brought up a lot, especially in the exploration and mining sector. Is there any logistics problems? I mean, we're seeing, like you said, oil going up. Are you guys finding any of this impacting you financially in any aspect of your business? Or are you guys able to kind of stave off with what you have, dealing with these explorations? Are you finding any issues around that?
Well, no, initially COVID was problematic for the miners because people weren't going to work,
Yeah.
right? So, but now that the sort of economy is opening up, there's no real problem in terms of mining. Like now we've sort of adjusted to it and are managing it. So production and cash flows are still growing steady and the commodities are higher. So on that basis, it's really good for gold companies. The only the supply barrier or disruption is more like moving it from, Chile to China, and then if China kind of puts a clamp down and it goes through another wave, then you just get these supply disruptions where, it just can't get there. But it's more on the supply chain rather than at the mine level.
So the hardest thing for you then is basically getting it not only from your hands to basically getting it to the retail market and in their hands. I mean, that's a pretty good problem to have. Let's be real.
Yeah. But there's a shortage of labor as well too. So we're going to see labor wage inflation, but it's basically everything in the world is taking longer to achieve.
Yeah, that is very true, but it's nice to see that you guys aren't getting impacted
except for these video conferences.
I'm loving it. It's been great for my business, but I really enjoyed this interview here today, Rodney. I really appreciate your time.
Yeah, I could just do one note too. Like, even though timing is very important when you're investing in commodities, and now is a good time, to take advantage of this pullback, I believe. We're a copper gold exploration company, so once we get drilling on the copper porphyry, and if we hit a mother lode deposit, like that's all you need in terms of timing. We'll get the joy anyways, either way.
I love that insight, brother. I really appreciate your time today.
Yeah, perfect. Yeah, thanks for the chat.
No problem. Anybody has any questions, always let us know what you think in the comment section below, and we can front them to Rodney here. But in light of this, stay cool, stay awesome, and we'll catch you in the next one.